Japan's Nikkei has had managed to surpass beyond the 45,000 market.
The support now, 24,988 was the first one, 40 hourly exponential moving average, 2586, 2580, unchanged. Nifty Bank for now is blinking red and green.
We are stuck in a narrow band. We need some time correction because valuations are expensive.
The way I look at it is consumer in occasions. How do I get a share of the occasion?
The open today was around that 25,070 mark, and we've only built on to gains from there.
Tactically right now, I would be looking to reduce China and add to India.
These one-day talks which are going to decide the future, the fate of future negotiations.
It is a 105 point uptick that we're seeing on the Nifty.
Well, that was the day so far. 1 hour to go. You're watching Closing Bell. We're coming to you live from CNBC-TV18 Motilal Oswal studio. I'm Mahesh Nandurkar. With me is Surbhi. And bulls are back in control, Surbhi. It's 25,200 on the Nifty and the ticker as we speak. All eyes will be on the FOMC, the two-day FOMC meet, which begins today. And anything comes out of the India-US trade negotiations, which I presume are currently underway. But this is actually looking like a good screen. It opened flat, but now firmly in the green.
You know, and this has been on for the last 6 or 7 trading sessions at least. Even last week, Rima, if you remember, was exactly this. It wasn't about one big bumper gain or a mega rally, but small incremental steps. And that's what we did last week when the market put on about 1.5% at the index level, at the Nifty level. And slowly we seem to be building on it again today as well. Actually, global cues have been very, very supportive because tomorrow is the big FOMC event day. And ahead of that, even if you're looking at US futures right now, they're building on the momentum. Last night, we again got a very solid handover, again record highs for the NASDAQ and the S&P 500. And despite that, futures are indicating another positive session overnight. So it's been largely good. Many of the Asian markets have also had a very good close. And all of that is leading to some positivity rubbing off on our screens as well. Today, actually, it's a good day for large caps because till yesterday, we were talking about only select mid-cap stocks moving around. But today, even large caps have done well. Look at names like Kotak Mahindra Bank or Axis from the frontline banking space. Yeah, there we go. We've got the contribution, movers and shakers on the screen. So L&T, Bharti, Kotak, M&M. It's a pretty diverse screen, as you can see. Not much to complain about. And in fact, if you talk about the declines as well, a couple of consumer names. There's Shriram Finance, which is down over 1%. Otherwise, beyond Shriram, there is no other stock on the Nifty, which is down over 1%. So definitely a pretty decent afternoon. And Rima, like she reminded us in the morning, today is the second Tuesday expiry.
Yes.
So let's see if the bulls can close with a hurrah by 3:30.
And it's a broad-based up move. There is no big sector or, individual stock, as you pointed out, in the Nifty, which is down. I think it's the only FMCG index which has got a mild downtick. But outside of that, look at the big indices. You've got banks up nearly 250 points, the Nifty Banking Index. You've got the auto index fighting for the bulls. That's got a gain of about 1.25%. The Nifty IT index is moving in step with the frontliners. So it's fairly broad-based. And mid-caps are moving in step too. Mid-cap index up half. Advanced decline ratio stands at 2:1. Let's also tell you what we have for you on our show today in the next 1 hour. Markets are trading with strong gains on expiry day. The Nifty's touched 25,200, led by autos, financials. Broader markets gain in line with the key indices. We'll speak exclusively to Jefferies' global head of equity strategy. We spoke to him, Chris Wood earlier today, who believes that India remains the best structural growth story in the world. Excerpts from that interaction will follow shortly. But we'll chat with Jefferies' head of India research, Mahesh Nandurkar, who will be joining us on Closing Bell today to share his views on the Indian markets, where we are headed. In stocks that are on our radar, Tata Communications is surging following a bullish note from Macquarie. They've given an outperform rating. All this and much more coming up on Closing Bell.
Absolutely. So plenty of action. Must add over here that levels become really important because this whole zone of 25,000, 150, 200, people were seeing this as a big supply zone or a resistance zone. Now, if there is a decisive breakout above that, then could it force some of the shorts to cover because it is the weekly expiry of contracts today as well? Let's actually discuss that technical factor and, of course, trading ideas with Mitesh Thakkar, who's joining us. Mitesh, good afternoon. It's actually looking very good. Started very, very quiet and steady in the morning, but now it's 130 points right now. How would you approach the last hour?
So, good afternoon. See, my sense is that, broadly the market was always biased on the upside. And once we started getting past 25, 150, I think the next target which I indicated was 25, 263.20. So we are heading towards that. Now, that has a couple of things, So there were two intraday highs and pivots around the second and third week of July over there, and then there's a falling gap. So I think that will be a much difficult level for the markets to get past, but I think there's some more upside left. People who have long positions on the Nifty now should trail their stop losses to about 25, 135, and try to take profit slowly as we get closer to about 25, 260. So that's the idea on the index. On stock, I have a buy on Gas Authority. It was a buy a couple of days back as well. Now it's showing good continuation pattern. So keep a stop below 170, 870, and look for a target close to about 188 to about 190 on the upside. And the other stock which I have by recommendation, I think that's a buy on Union Bank. The PSU banking lot is looking good. So Union Bank is the other stock. Union Bank is a buy with the stock just below levels of 131 half, and look for target around 140.
Okay. All right, Mahesh, got it. Thanks very much for that. We'll come back to you for some more ideas in a bit from now. But let's put the spotlight on IT once again and Tata Communications. Remember, we were discussing this stock yesterday as well because of this acquisition that they've made. And Rima, there's some follow-through buying today as well.
Well, the acquisition was Tata Tech. This stock that we're looking at right now is Tata Communications.
Tata Communications. That was Tata Tech, yes.
That was Tata Tech with S-Tech. And now we're looking at Tata Communications. So basically, this is after Macquarie, met the management. It was a non-deal roadshow, NDR as they call it. And now Macquarie's target price is the highest on Tata Communications at more than 2,200. Basically, it's not that they've said anything new. They've reiterated that data revenues will hit 28,000 crore by FY28 and EBITDA margins will scale to 23 to 25%. But just to put it in context, in FY23, in June of FY23, that's 2 years back, the company had said that in 4 years, we will double our data revenues. 14,000 will become 28,000, which means by FY27. Then a couple of months back, the company deferred it. They said that, it's been very challenging, etc., pricing, competitive intensity, etc. So therefore, now we're delaying it by 1 year. So the target, which was FY27, got pushed to FY28. So now, again, Macquarie is only reiterating that the company has said FY28 will, by FY28, we will hit 28,000 crore in terms of revenue, and even margins will get back to 23 to 25%. Now, if you look at the historical margins of Tata Communications, it used to trade at 24, 25%. There you have it. FY21, FY22. Then in FY23, they set the target. In 4 years, we will continue to be at 23, 24. But things went south. The key reason is they made acquisitions like Kalera, Switch, which were low margins. So those acquisitions were lower, plus there were integration costs, then market dynamics, competitive pressures, macro, etc. And therefore, margins came down. But once again, the company is reiterating that we will get back to 23, 25% in terms of margin. The brokerage review will come up. Despite the stock, the earnings being fairly tepid, last 5-year revenue CAGR is only 5%. But brokerages are largely bullish. And as I said, Macquarie's now target price at 2,210 is the highest on the street. So what do they like, so much? So they're basically saying this investment phase in the company, the acquisition is all behind the company. Now they're focusing on profitable growth. Also, this is a company which is now transitioning. So, in that data revenue, there is a big chunk of it, majority, 65% of that is these new age digital kind of services. So therefore, it's transitioning itself from a legacy player to a digital player. And plus, there is some optionality. This AI infrastructure, GPUs, etc., data center play, that is an optional, value if as and when it scales up. In nascent stage right now, but that is the optionality. But on the whole, I think the street has once again taken a relook at Tata Communication. But as I said, it's not that it's fresh guidance. The company is reiterating it, 28,000 by FY28 with margins building up.
What's really interesting is that all of the brokers who have a buy call, like you pointed out, all of their targets are northwards of 2,000.
2,000, yeah.
And the stock is at 1,700 right now. Interesting. Macquarie, MK, CLSA, Nuvama, ISEC, JM Financial, whoever has a buy, says it's heading to levels of 2,000 plus. That's Tata Com. Thanks, Rima. It's pretty interesting analysis. Let's discuss this and more with Dharmesh Kant, head of research at Chola Securities. Dharmesh, thanks for joining in. Just wondering, is this stock on your radar, Tata Com? Any thoughts?
Yeah, good afternoon, Surabhi. I mean, most of the points which Rima highlighted are valid points, and operational efficiencies and leverage is likely to play out after the synergies are already built into the place, and they have a lot of land parcel as well. And if they use it for data centers, as has been the case of most of the realty players nowadays, it can add to the value. And so it's more of a consistent kind of a defensive utility play. So data volume is likely to go up and it's in the upward direction. At the same time, as we have seen in the case of, say, communication providers like Bharti and all, they have been upping the ARPUs. So some revenue uptick can also be expected, and pass on of that increased revenues to Tata Communications as one of the largest, network provider across the board. So I do think, and the target price which most of the brokers have put out is near to their previous all-time highs of around 2,100. So it's more of a tactical trading play, given the light in which the market is operating, and more of a sure-footed kind of a trading bet. So to my mind, 2,000, 2,100 can be there in the offing. But from there on, we have to see how this entire structural play pans out on the operating margin front.
Okay. Dharmesh, Reddington, 20% up on that, very large volumes, nearly 1 crore shares traded on NSE. Are we missing something?
I'm afraid I'm not aware if we are missing something on that. But Rima, I mean, these are the times when you will see such plays happening as we head into the festive season. Anything and everything to do with consumer kind of, whether it is an outlet or distributor or anything linked with that. Some opportunistic buying can play out there, and I think it's more to do with that. Otherwise, the business-wise, I don't see anything meaningful happening out there which can change the trajectory or the growth trajectory of the business which Reddington is into.
Okay, so a lot of these stocks in focus, IT/IT products, hardware, digital. So that's the flavor. Dharmesh, to round off the conversation on IT and IT related stocks. So there's Infosys on one end of the spectrum, and there's something like NetWeb on the other end of the spectrum, which is obviously trading at top dollar valuations as well, because the market's very hungry for any AI related play, anything which which has an AI tailwind. So what would you rather buy? An Infosys from a defensive point of view, you have the buyback cushion, or would you still look at names like E2E Networks or NetWeb despite their run up?
Yeah, so as far as E2E Networks or NetWeb is concerned, they are more of a cloud-based GPU, CPU, hyperscaler kind of a play, which is again, sharing of data and time sharing of data based on the capacity utilization which our client is looking for. So that is not a very scalable model in the long run. In short term, it may still give you a good growth trajectory, but we are not very positive on that space as of now. It may give you a trading play. Large caps like Infosys, TCS and all, again, it's not even a defensive right now, because business point of view, it's very, out in the offing whether it will play out and how the turnaround may happen, which as of now is not visible. However, any software development services play, I mean, any companies which are exposed to software development services kind of a thing, where it can be even related to AIs, they have been doing well. Case in point being Persistent System or Coforge and the likes. So there we are focusing. Genser Technology is also looking good. Birla Software is also pretty looking good. And at the same time, there is a tailwind of this currency depreciation which is happening. And in case FOMC cuts rate, so the transmission of new deal wins may not be there for Infosys and TCS, but definitely for the people who are into the services of technology, software development, they may still get it. So engineering, research and development with a view on software development services is where the action should be in near, say, 3 to 6 months. So those are the spaces we are constructive on, and the companies are Persistent and Coforge.
Got that. Thank you, Dharmesh, for joining in. Need to slip into a break, but as we do that, let's listen into important insights that we got from Chris Wood of Jefferies on the Indian markets, US tariffs, and where we're headed.
So in the big picture, this is just a year of healthy consolidation in the Indian stock market and what remains, in my view, the best structural growth story in global equities. And the big positive for the Indian stock market is the huge continuing mutual fund inflows have absorbed this supply. Now, if those domestic mutual fund flows did not exist, the Indian market may be down about 20–30%, and then that would have triggered big foreign buying. But because the domestic flows have been absorbing the supply, we've had this sideways trading pattern. But in the big picture, it's a healthy consolidation. And my view is very simple. In this Indian government and no Indian government is going to open up agriculture. And my view is also very simple, that this Indian government is not going to be ordered around by the US about not buying Russian oil, most particularly when it's pretty clear to everyone that this oil is refined in India and then bought by the Europeans. It's quite conceivable that it wouldn't be a surprise if we traded sideways for the rest of the year. I am assuming a pickup in nominal GDP growth. If I'm wrong on that, then I'm too bullish. Nominal GDP growth is key because corporate earnings are reported in nominal terms, not real terms. Historically, India's been growing in a 10 to 12% nominal GDP range. This year, nominal growth's been, I believe, below 9%, and that reflects the relatively lackluster earnings outlook.
Yes, Papa.
Life doesn't stop for anyone. Even we won't let you stop. At every stage of your life, with LIC, you are always insured. LIC, har pal aapke saath.
How's this? Or should I go for this?
Yeah.
Leave it. You're not even interested. Should have brought mom instead.
How's this?
Wow. Oh my God.
Should we send it to mom? Step in or sign in. Love is light. Candia, lifestyle jewelry.
Driving scale, unlocking new markets, banking on the global south. The Leadership Collective brought India's leaders together to share ideas that will shape tomorrow.
We're living through a complete global reset. Banking is going to change completely from what we see. Trade will move from paper to platform. LCs will be probably digital contracts. AI can work faster than any analyst in looking at risks. But for us, I think it's not a tech shift. This is actually a global strategic opening.
Catch Standard Chartered presents CNBC-TV18 Leadership Collective at this time only on CNBC-TV18.
Presented by Standard Chartered.
Welcome back. You're with us on Closing Bell. And as promised, let's get that conversation going with Mahesh Nandurkar. Of course, the Jefferies India Investor Conference is underway and we have plenty to ask. He's, of course, head of India Research and India Equity Strategy. Mahesh, great to have you in. You know, we were just listening in to Chris a while back and he was giving us a big picture view on India, on flows and what's happening with, this trade deal. And what happens to the market if it gets done or not done. But now we want to get a little more micro with you, Mahesh. And I think at the crux of it all is this earnings story in India, which has been, sputtering along, single-digit earnings. And now we can't handle what happens with the trade deal, but from the RBI side, from the government side, GST, income tax, all that stimulus has come through the system. Will it translate into better earnings growth this year?
Yeah, hi. It's good to be here and thank you for inviting me. So on the earnings growth story, we definitely believe that the government has done or played its part in terms of the income tax cuts or the GST cuts that we've seen. And I think it is going to be really very crucial to watch the bottom-up data over the next 1 month or so, especially on the auto side and the segments which have seen the GST cuts, but especially autos and air conditioners. And my expectation is that we should therefore see a very strong pickup in the volume growth in these categories over the next 1 month particularly, but even beyond. But if that does not happen for whatever reason, then I think it will be a very big negative in my view. But that's not our base case. Our base case is that we have a very strong festive, which should reflect in strong double-digit volume growth for passenger cars, for two-wheelers, and other consumer durables. So we are clearly watching out for that data over the next 1 month or so. But by and large, the earnings story is dependent not just on the GST side, but also on the credit growth side improvement as well. So there, what we believe is that over the last 6 months, the Reserve Bank of India has taken a variety of measures such as cutting the interest rates, cutting the CRR, reducing the risk weights on consumer loans, and all those measures to result into a higher credit growth as well. So over the next 6 months, we are looking forward to one, the impact of the GST cuts, and secondly, the impact of credit growth improvement driving the corporate EPS growth to be better in the second half.
So headline EPS growth should be in double digit, Mahesh, at least for the second half of the year. And for the full year, what are you expecting now, FY26?
Yeah, double digit in the second half. For the full year basis, I think it would probably still be in single digits, maybe in high single digits. And I think the next year, FY27, should be a much better year. Looking at 12-13% EPS growth in FY27, the primary reason for the full year EPS in FY27 to be 3-4 percentage point higher than FY26 is once again going to be driven by banks in my view. This year, FY26, we have seen the bank sector earnings getting negatively impacted because of the rate cuts and because of the negative impact that it has on the net interest margins. I think those should reverse next year, driving a higher EPS growth from the banking sector. And that would be the primary reason for next year. But this year, I think we should still be in single digits, high single digits for FY26.
Will this be a catalyst for market returns? Because so far, it's been very, very muted now. 1 year of no returns. Now, with a double-digit kind of earnings growth in the second half, 3-4% higher in FY27, do you see the headline index moving from a return point of view, or will that be still capped?
Yeah, see, the thing is, in fact, we spoke from the very same venue exactly 1 year ago. At that time, we did highlight our cautious view on the market. Thankfully, the markets hasn't really gone down. We are just about the same level where we were about a year or so ago. But I think what has happened over the last 12 months is that the other regional market like the Korea, Taiwan, even China, they have done extremely well. So while the Indian market did not go down in absolute terms, but it has underperformed the regional or the emerging market benchmark by almost 30%. So to that extent, the relative valuations has seen a correction, not the absolute, but the relative valuations because of much stronger performance by the other regional market. Even at this point in time, I believe that value versus growth equation is not looking very, very conducive if I take the next 12-month view. So the earnings growth improvement that we just talked about, I think it's already, in my view, expected. So should not be a very big trigger. But I think what really makes us optimistic on the market from a near-term perspective is that the foreign investor positioning on India is at a very, very low level. 67% of the emerging market funds are underweight on India. India has already underperformed. And most of the conversations that we are having with the investor base is is it the time to close out that underweight? Basically, is it the time to buy India and bring it to the neutral level? And we need a trigger for that to actually unfold. And my sense is that a potential improvement in the India-US trade relations can be that one big trigger. If that were to happen, we should see a decent spike in the market.
And we know that, sometimes these things, they have a domino effect, right? The moment the first trickle of money starts coming in, then others start following, and suddenly it's a gush. So when it happens, these things usually happen with momentum. Okay, so the resolution of the India-US trade impasse, that could be one trigger. What else? What are the other conversations around you at the conference? It's only day one, I think, today, Mahesh. One piece is IT, and I know that you guys are underweight on IT, large cap IT services. But the market is trying to seek out new themes, and some of them are very small companies, mid cap or even small cap companies. But there's a bit of a digital play or maybe a tiny hint of a platform play. We don't have too much of that here in India. Then you have the consumer tech companies, of course, whether it's platform or, the Swiggies and Zomatos of the world. How are you looking at that missing link in the India equity story?
No, that's a very fair question, Surbhi. So, in fact, that is one of the key reasons why the North Asian markets have done so well and Indian market hasn't really done that well. The primary reason, as what you said, for the global investors, the key investment theme for last 12 months or maybe even last 24 months has been the rise of AI. And as you mentioned, in India, we don't really have many large cap names that are actually a play on the AI theme. So yes, there are some small cap and mid caps that you can find, but no large caps as such. And that's one of the key reasons. So I feel that so long as AI remains the most dominant theme for global investors, which is the case right now, it is difficult for the Indian markets to outperform the other regional markets. And so, in fact, in many ways, India is also seen as a country or the economy where there could be a possible negative impact coming through the IT services sector. And that's why we have an underweight on IT services.
Do you expect, clearly you have an underweight, so you don't expect anything spectacular from legacy IT services companies. But, in best case, will they remain neutral or could they provide a downside drag if IT earnings start really tapering off in the next couple of months? What's your base case?
Yeah, see, the thing is, I do believe that from a 12-month standpoint, it should be an underweight sector. See, in between there can be some short-term trading rallies because of investor positioning and because of maybe some positive news coming here and there. But my sense is that the best way to play the IT story is actually some of the mid caps and small cap names which are actually driving a much higher growth. Many of the large cap IT names are growing in that single digit zone at this point in time. But some of the mid caps and small caps, as I said, are growing in like double digits. And although they're trading at higher multiples, but I think the investors and the market is right now willing to pay that higher P multiple for the visibility on growth that we are likely to see from some of these mid-cap ideas. So I would continue to be underweight on the large cap names and the sector as a whole. But yeah, some selective mid-caps ideas can be looked at.
Got that. Mahesh, you said same time last year, you were cautious in the markets. It played out well. We didn't do anything, sideways. At this moment, if you had to characterize how you feel about Indian markets in one word, what would it be for the next 12 months?
Short-term positive because of, as I mentioned, the investor positioning, the foreign investor positioning in India is very, very weak. So any small positive or any positive like the trade deal can actually drive the markets up in a big way. But beyond that, difficult to see many long-term triggers till the time the valuation versus growth equation improves. And I think it's a healthy consolidation phase, in my view, which is something that Chris has also, mentioned about. So I think nothing wrong from a long-term perspective, but but just to summarize, a possible trade deal, we see a spike, then the market flattens out for the next 12 months or so, and that is required for the valuation, growth equation to look better, and also by that time the large equity paper supply would probably also be behind. So that's the sort of 2-minute summary of the views.
Well, summarized. So since this is a bottom-up market, in one of the model portfolio changes, Mahesh, Bajaj Finance is replacing Bandhan because Bajaj Finance is better placed to capture the consumption upside due to the GST cut. Now getting into stocks, but broadly, what would be the best way to play the GST rate rationalization that we've seen?
Yeah, so I definitely believe that the segments that have seen the GST cut, which is the two-wheelers, four-wheelers, cement, some FMCG names, and also some other consumer durables like AC. So those are the 5-6 categories which have generally seen the benefit, from the recent government move. The best way to play that from the stock market perspective, I would say cement is a very strong idea, very high conviction idea from our side. It's not just the beneficiary of GST, but I think that sector is also going to be a beneficiary of normalization of the pricing trajectory that we've been seeing. We believe that the current cement pricing and profitability is significantly below what the historical range is. It needs to correct in a big way. The GST rationalization only helps that. So cement is definitely one of the strongest ideas in my view to play the GST story. The second sector that I would say is two-wheelers. Once again, a very clean story in the sense that the volumes for the industry as a whole are still at about FY19, which is the pre-COVID levels. So there's a lot of pent-up demand. And my sense is that you will definitely see some volume recovery on the back of GST. Here, the only point that I will make is that I would rather play this story with some of the companies which are gaining market share as well. But two-wheeler industry as a whole also looks quite good, but one can take a more selective bet within that. So those are the two sectors primarily that I would look to own. And yes, you mentioned about the NBFC segment. I think that's the third segment, which is what will be a beneficiary. Not so much of the GST, but more of the improvement in the credit growth that I mentioned earlier. I think NBFCs will stand to benefit more than banks of that possible improvement in the credit conditions. So those are the three sectors that I would pick on the back of some of the themes that we have discussed. But of course, some of our long-term positive views on telecom continue to remain intact, and so does real estate as well.
Okay, all right, Mahesh, great conversation as always. Have a good conference, and we hope to connect with you maybe post, get a sense of all the views and what the investor speak was like. Thank you so much for joining in. That's Mahesh Nandurkar with the Jefferies view on the India portfolio and the India call. Well, we have to take a very quick break on that note. Come back on the other side. Lots lined up. As always, a buzz on all the dealing room chatter coming up. Then we have some ideas for you. Final technical trades with Mitesh, the buzzers of the day, and of course, the FNOQs. Stay right there.
Index funds. Index funds are as simple as 1, 2, 3. Match the market effortlessly. Save on cost, more for you. Quick and hassle-free investment option. Index funds simple है.
म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है. योजना से संबंधित सभी दस्तावेज सावधानी पूर्वक पढ़ें.
सॉरी यार, नो टाइम टू टॉक. Amazon का ग्रेट इंडियन फेस्टिवल आ रहा है. आज ही रजिस्टर कीजिए और अपना बिजनेस दुनिया के सामने ले जाइए.
लखनऊ के लिए जाने वाली अवध एक्सप्रेस प्लेटफॉर्म नंबर 2 पर आएगी. गोवा के लिए स्टार क्रूज प्लेटफॉर्म नंबर 2 से ही जाएगा.
ये सब आपको एक प्लेटफॉर्म पर मिले ना मिले, पर शेयर इंडिया प्लेटफॉर्म पे आपको इक्विटीज, डेरिवेटिव्स, कमोडिटीज, इंश्योरेंस, म्यूचुअल फंड्स और एल्गो ट्रेडिंग एक साथ मिलेगी। शेयर इंडिया, डाउनलोड द ऐप नाउ।
Investments in securities markets are subject to market risks. Read all related documents carefully before investing.
Welcome back. Picking up some more weight now. It's 25 to 35 on the Nifty. When we started the show, we were at 25,200 exactly. In the last 30 minutes, added on some more might. But let's talk about individual stocks. Hormus is here to put the spotlight on the movers and shakers.
The broader markets have been abuzz and they continue to remain so. The starting off today with a stock called Vascon Engineers, and this stock has seen the biggest single day gain since May, but on volumes today that have been the highest on record in the company's 15-year history as a public company. Over almost 5 crore shares have changed hands. The 20-day average is 15 lakh, but that's not the interesting bit. Here's the interesting bit. The stock fell to a low of 6 rupees for during the COVID-19 pandemic, and it's up 11x from those levels. However, despite being 11x up from its COVID lows, the stock is below its IPO price, which is 165 rupees that it began trading with back in 2010. That's Vascon Engineers for you. The second one on the list is Redington. Of course, it's been the top mover. It's been the big talking point all through the day. 20% higher now on the stock. The biggest single day gain since May of 21. The highest single day volume since March of 23. We have already had 10 crore shares of Redington that have changed hands compared to a 20-day average of just 11 lakh. Of course, there's a small block deal involved in this as well. Now, because of this move, the stock has broken above all important moving averages, and today's turnover and counting, of course, which is close to 3,000 crore rupees, is almost 11 to 12% of its overall market cap. A stock that has been beaten down over the last 3 days is Ixigo, and Travenues Tech was down yesterday, down on Friday, another 6.5% shaved off today as well, and as a result of which it's down almost 16% in the last 3 trading sessions. Now, from the 1st to the 10th of September, the stock moved from 270 to 320, and now it's back to 270. So all the gains that it had at the start of the month, the stock has given up all of those gains, and the volumes in the last 3 sessions where the stock has been declining has been higher than that when the stock was gaining. Now take a look at this. During the 1st to the 10th of September, the stock was trading with volumes that were around 35 lakh shares, the daily traded volume for Ixigo between September 1 to 10, and between the last 3 trading sessions, that average volume has increased to almost 50 lakh shares. Today's session, we have already had over 1 crore shares change hands. The 20-day average is around 26 lakh shares. And the last one on the list is Lakshmi Dental, and we spoke about this stock a couple of months ago. They snapped a 5-day losing streak today. In July, the stock had coverage from Motilal Oswal, where the bull case upside, where they had projected a 75% bull case upside for the stock. And since then, the 21st of July, we have had 39 trading sessions, and in those 39 trading sessions, the stock has gained only 11 times. And from those closing levels of the 21st of July, the stock is down 30%. We have already had more than 1 crore shares change hands. The daily average is only 1.5 lakh for Lakshmi Dental, and despite this 20% move today, the stock remains well below its IPO price of 428 rupees.
Okay, all right. Never a dull moment when you have Hormas with that list ready. Real eye catchers there, one can say. Thank you for that, Hormas. Well, with that, let's move on. It's time for D Street Chatter. We have Nimesh joining in. Nimesh, so what's the latest? Markets looking good, actually. I mean, the index, broader stocks, the morning was so quiet. Afternoon, not bad at all.
Absolutely, Surbhira. So at day's high, Nifty is up almost 150 points. And my sense is today's move is not only short covering, but buying as well. So I understand at least some of the large institutional desks have turned net buyers today. So I'll be very closely watching out for the institutional data. Maybe you'll see a big surprise positive number from the FIs in today's market. But do remember, today is the weekly expiry. So there's a bit of, expiry play as well, which is playing out. And that's the reason why the large caps have today relatively outperformed the broader market stocks today. So that's the overall feedback. The flow, as I said, the flows are strong. The sector that stands out today for me is the financials basket. And within that, the NBFCs is what I understand are well bid by the domestic funds. So clearly money is changing now housing finance companies and the NBFCs as a net basket by the domestic mutual funds. I've been saying for a while now that, if the Nifty closes 25,200, you will see a potential further short covering rally, and that looks like is on the cards. Now, the further feedback is if there is a indeed short covering rally, watch out for the PSU basket. There are a lot of PSUs, FNO stocks which are net short by the hedge funds, and you might see a bit of a short covering rally there. So, potential short covering rally further in PSU is what the feedback is. And today, for a change, this upside is also led by a very strong FI buying. So, I'll be watching out for the FI data very closely.
Yeah, I mean, it's all large caps, and that's exactly what I was thinking, that, apart from short covering, is there some fresh cash market inflow coming in? So that's what Nimesh is pointing out. So let's wait for those numbers. Nimesh, what about stocks? What's interesting on your radar today?
Well, so the first stock on my list is Happy Forging. We've, I think, forgotten talking about this stock, but it's been consolidating in a range of late. But now I understand there could be a potential corporate development on the cards. A likely inorganic move is what I understand is likely in Happy Forging. So that's the first name. The second stock is Bajaj Projects. Again, the stock has seen a bit of a correction in the recent weeks. But I understand with today's block, there was a clean-out trade from one of the domestic mutual funds. They've completely exited. I understand some large HNIs have bought. And interestingly, a peer mutual fund has now accumulated and now must be holding close to 8-9% of the company. So that's Bajaj Projects, the second name. The third stock is GMR Airports, one of the big mover in the FNO stock today. And again, it seems like some bit of interest is back. There was a block last week as well. I understand one very large long-only FI had bought. And now I understand some large HNI is also buying into GMR Projects. So that's the reason why that's been buzzing in trade. And the last one is Radico. We saw that initiating report from Jefferies a couple of days back. And Radico stands out within that basket, largely on back of institutional buying. Understand at least one large domestic PMS seems to be an active buyer in Radico even at current levels. So that explains a delivery-based buying as well as a recent upside within that alcohol space. So that's Radico, been buzzing in the back of PMS buying into Radico of late.
Okay, all right. So plenty of action out there. Nimesh, thanks very much, as always, for getting us a quick roundup. Well, with that, let's quickly move on. I think we've got Sudarshan joining in. Let's take stock of what's happening in the FNO market as well. That weekly expiry is playing out nicely. And I guess some of these shorts could be running for cover, Sud.
That's true, and it's a day of all-round gains, and that especially after several days we are seeing big buying in financial space, and that is helping Nifty to hold on to levels above 25,200, and even Nifty Bank is above some of the important levels and currently above 55,100. And if you talk about the sector that has been in the focus, the realty stocks, all the realty stocks are buzzing in trade, and most of them are up somewhere in the range of 3 to 4%. And one sector that has been in the focus, and today also it's in the focus ahead of Fed meeting, is the Nifty IT. Most of the major names, heavyweights, currently are trading near flatland, and that is especially because Fed meeting is going to happen, and most of them are waiting for what exactly the Fed decides. Now, coming to the PCR put call ratio, you will see that it has increased to 1.44 versus yesterday's level of 1.09. There is a reason to it, because we are seeing a huge open interest build-up on the put side, basically huge writing. And you see that if options are increasing, at the same time there is a sharp fall in the premium. So for September 23 expiry, you have taken 25,100 put. If you see the premium, today's premium is 65 versus yesterday's close of 114. But in contrary, if you look at the call side, 25,200. Premium has increased to 159 versus 102. So for now, range for Nifty has become 25,100 to 25,200. If we manage to cross the level above 25,250, next resistance for Nifty comes around 25,500. So support for Nifty 25,070, immediate resistance 25,250, next resistance 25,550. As far as Nifty Bank is concerned, support is today's intraday low of 54,800 and resistance is 55,630. That is the important level, both 50 and 100-day moving averages. Some of the stocks that are seeing fresh longs from Nifty, two major stocks, Maruti. All the auto stocks have been moving higher, and today Maruti is up almost 2%, even M&M is up 2%. L&T is seeing fresh longs, it is also up 2%. And from the broader market, Cyient and Supreme Industries are seeing fresh longs, and two stocks that I have taken are seeing short covering are UPL and Container Corp.
Okay, all right. So plenty of action at the index as well as individual stock levels. So thanks very much for that. We'll come back to you after a couple of minutes. We need to understand what's happening with Tata Motors as well. We'll go back to Sud on that in a bit. But for now, let's head across to Mitesh once again. Mitesh, it's indeed turned out to be a really good afternoon. Who knows, when we first spoke at 2:30, I accidentally said 200-point rally. Who knows, by the end, it could actually be a 200-point rally. Final trades, what's the advice?
That's true, and I think, it's getting stronger. But as I said, I think, as we get closer to this 25, 260, 320 zone, I would be, at least willing to take some profits off the table, purely because I believe that multiple supply pivots exist in the 60, 70 point kind of range. So now is the time to, I think, at least lighten up on the index. But on the stock side, Chola Finance is a buy. I think, that's a BTSC rather. Doing very well near the day's high and good price level action. So BTST here. Keep a stop below 1569. Look for a target of 1605. And the other one is Bank of Baroda. That's a BTST with a stop just below levels of 238.5. Look for targets of 244 to about 245.
Okay. Thank you very much for that. In fact, let's go back to Sudarshan now, because Tata Motors is a stock on our radar. The company has faced some cyber security incident on the 31st of August, which resulted in a systemic shutdown and halt in production. And this is also resulting in losses for the company. Sudarshan now joins in for more on the story. Sudarshan.
So JLR has today released an updated statement related to cyber incident that had occurred on August 31. So first time that company had released statement on September 2. And on that day, company had said that it has shut down its entire system. And the next statement was released on September 10, in which it had said that it's working with cyber security specialists to resolve basically restart global applications. But on that day, it had mentioned that some of the data was impacted because of cyber security incident. Now, in today's statement, it's saying that it has extended the production pause till September 24, and also forensic investigation is continue to know exactly what is the major issue. Now, beyond that, two of the BBC and Telegraph have reported some of the details. What can the impact be because of this? So, as per BBC, it's saying that cyber attacks may cost JLR up to £5 million per day, and it has come at the worst time because recently UK government had announced registration of new plays, and due to that, people were expecting that sales would increase for JLR, and that's the reason they are saying that it has come at the worst time. And now Telegraph is saying that even if company is saying that production is paused till September 24, but production may be paused till November. And that can impact the wholesales not only of Q2 of FY26, but even it can impact wholesales in Q3 as well. And why it's important for Tata Motors? Because JLR forms almost 70% of its consolidated revenue.
Oh, absolutely. And therefore, this production halt is obviously a niggling worry. We'll keep that in mind. So thanks very much for placing it on the radar as well. Okay, well, on that note, let's welcome in our next guest. Jay Bala of Cash the Chaos is joining in. Jay, great to have you on. Good to have you with us today. I was just taking a look at, the charts and, what's really changed. So 29th of August, from that low, which was around 24,500 thereabouts, the market's done a nice 700-point move, near 700-point move now here in India, Jay. What's your sense? I mean, do you see some momentum picking up, or is this just a trading rally and we're pretty much playing the boundaries here?
Hi, sir. Very good to be here on the show. I've been pointing out since July that 24,400 was an important support, and the markets bottomed at 24,337. So just a shade beyond our 24,400 objective. And today we have a higher swing high about 25,153. And that's a positive sign. I'm bullish on the markets and continue to be bullish on the markets, but the pace of the momentum is a little bit of disappointment for me, but not too much of a disappointment. But sectorally, capital goods have started to fire, and metals have started to fire, and reality is starting to look positive. And so overall, the picture is positive. And in my opinion, this is not a short-term rally. But I would like to see the markets close about 25,400. Once that's done, I think the advantage the bulls have currently will be much more stronger. So I would like to see a close about 25,400.
And if that happens, 25,400, because it's what now? It's about a little over 200 points. Actually, yeah, it's less than 200 points from where we are today. If that close happens, then what sort of levels are you looking at?
See, the question for the market to me has always been whether the bull market that started in April, did the correction complete at 24,337 or is it getting delayed? That's the only question for me. So if the markets were to close about 25,400, I would think the 25,337 is a very strong low, and we are looking at fresh 52-week highs. And from 6 to 12 months perspective, we are looking at 29,000 on the Nifty. That has been my objective. The short term has been a little bit of flux. Despite the US markets going to record highs, the Nifty has lagged even the Asian peers like Nikkei, which has gone to record highs. So, the short term was the only thing in question. Let's watch for a close about 25,400. And I think it will take out the July high once that's done. That's about 25,669.
Nikkei is up about 12-13% from the start of the year. And today, briefly, even crossed that 45,000 mark. So it's done well. India has lagged compared to most of the Asian peers. What about banks, Jay? The Nifty Bank today has comfortably surpassed 55,000. It was struggling a bit, but now it seems to be gaining some traction. You told us the sectors you like: capital goods, metals, real estate. What about banks and any individual banking stocks on your radar?
Yeah. State Bank is a very important juncture. Today's high is about 832. If it closes above 835, that will be a very good breakout for the stock. We need to see a close above 835, 837 to be sure that this is not a fake move. And that will clean out the bass if SBI were to close above 835. It's been consolidating, coiling up as a triangle for several months now. And that's the reason why you see some, positive price action, the PSU index too. There is that will bring about a change in the Nifty banking index, which will cross 56,136. That will be a failure of the head and shoulders stock. So watch out for 56,136 on the banking index, and also a close above 837 for SBI. That will be a very important turnaround for the banking sector.
Okay. That's as far as the banks are concerned. You mentioned quite a few other sectors have started participating. Very true. Real estate, you have PSUs, for instance, coming back, names like BEL, etc. L&T is seeing some traction in the last couple of sessions as well. What else? What else is looking good to you?
See, the capital goods index, which is spoken in the opening comments, that's looking very bullish. I have a pick today for a stock from that space, currently at about 70,000 odds. From the April low, it's clocked a bullish 5-step move and corrected to 38.2 Fibonacci retracement in a 3-step fashion. That is a classic bullish setup. I'm sure the 76,000 high registered in 2024 October, around that sort of level, that will get taken out. So that's the reason why you're seeing, or L&T is contributing to this, and that's the reason you're seeing something happening in the basic capital goods index. And when it comes to metals, and I pointed out in July and August that 9,000 was an important level for the Nifty Metals Index, and that it started to bounce from there. And I'm sure it's also going to cross 10,300 shortly. So if you look at JSW Steel is clocking fresh 52-week highs, and Tisco is also Tata Steel is starting to look good. So I also have a pick for today from the metal space.
Okay. All right. We'll discuss more stocks, more ideas in just a bit. Jay, I have to take a quick break. But do stay with us. We'll be right back and then start counting down to what has been a solid session for the market.
टी ब्रेक के बाद स्कैमर्स हैं तैयार। सामने हैं अनुभवी बल्लेबाज।
हेलो, दिस इज कस्टम्स डिपार्टमेंट। आपके पार्सल में ड्रग्स मिले हैं। कस्टम्स? यस।
खतरनाक यॉर्कर सीधा ब्लॉक होल में, लेकिन मुस्कुराते हुए किया सामना।
मजाक मत करो।
शुरू तो आपने ही करा था।
कमाल का ब्लॉक। स्कैमर्स शॉक।
बी अलर्ट, बी स्कैम सेफ।
पैसा लगाना है तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ। डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड में मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र।
The crypto landscape changes every day.
We have seen a 24,000 crore
increase in trading volumes, roughly 40%.
Stay ahead of the curve with a quick guide. Expert views.
India, I think, is lagging behind in terms of crypto evolution, adoption.
And credible daily updates.
And so our industry will naturally become not about cryptocurrencies, but about the tokenized version of an equity, of a commodity, of a fund.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Europratik Sales Limited launches an initial public offer of equity shares of face value of 1 rupee each in the price band of 235 rupees to 247 rupees per equity share. Bid offer opening date is Tuesday, 16 September 2025 and bid offer closing date is Thursday, 18 September 2025. For risk factors and other details, please refer to the red herring prospectus available on the websites of the SEBI, the stock exchanges, the book running lead managers and the company.
Counting down to today's trading session, and looks like the Nifty is going to end around the 25,250 mark. The weekly NSE expiry seems to have held sentiment in the last 1 hour because markets spiked up in late trade. In conversation with Jay. Jay, we were discussing the index moves, but let's get to individual stock ideas. Any trading recommendations?
Yeah, one from the capital goods space and one from the metal space. I like Kirloskar oil engines. This is a stock setup right now is very interesting, and the short-term objective is about 1225. Stop loss about 825 would be ideal for this. And I have a stock from the metal space, that's Sandal Manganese. That's also looking interesting from a long-term perspective. Stop loss of 424. 424 with an objective of 685.
Okay. All right, got it. In the large cap names, within autos, Ajay, because a lot of the auto stocks have already run up, right? What looks good for more or best placed?
Yeah, I turned bullish on M&M in July, and that's doing pretty well. Maruti still got some steam left, but the maximum amount of upside, even from current levels, is possibly for Bajaj Auto and Hero Honda. I expect Hero Motors to cross fresh 52-week highs, somewhere about 6,300 and change. And Bajaj Auto, again, the 2024 high, I'm getting that to be taken out sometimes in the next couple of months. So that presents considerable amount of upsides in these two-wheelers.
Mm-hmm. Jay, just to shift track a little bit to global markets as well, we were earlier speaking with the Jefferies head Chris Wood, and he, based on fundamentals, was generally saying with the Fed rate cuts coming in, there could be a melt-up scenario in US equities. And then you have gold, you have silver. Relentless rally in these precious metals as well. So just a quick take on the precious metal space, whether you think there's more momentum there. And then on the mother market itself, US markets every day a new all-time high on these indices.
That's right. Gold and silver, they still have short-term upsides. But I'm not too sure that they've got a melt-up scenario there, because I look at markets from a structural perspective as well as from a sentiment perspective. Sentiment is quite elevated out there for gold and silver. But definitely silver is yet to complete its high sequence that started from the April low. And gold, for the sequence, it started from November of last year. So when the very short term, there is at least one down-up sequence. And I'm anticipating gold to touch about 3725 to 3800, somewhere in that region. And silver's 42.5 to 44. That's been my objective for the last several weeks. And when it comes to the equity markets, I've been projecting 24,400 on the Nasdaq cash and 6660 on the SPX cash. They are within striking distance. Futures are pointing to that levels. There, I think the sentiments are far more neutral rather than elevated. So there might be more juice there, but my objectives are still yet to get revised. The maximum upside I see for the S&P is about 6805, and for the Nasdaq about 25,000 both on the cash levels. But I would be a little bit cautious when it comes to precious metals. If you recall the last rate cutting cycles that started in September last year, rates was cut 3 times, but the US 10-year yield started to rise 33% from that point onwards. So I will be a little more cautious on the precious metal space, but definitely they've got short-term upsides.
Jay, just hold on. We'll come back to you. For now, just wrapping up today's terrific Tuesday trading session. We started off flat, but we're ending with a gain of about 190 points in the Nifty. The Nifty ending above 25,250, 3/4 of a percentage point gain in the sensex with a smart rally of 650 points. There was a last surge towards the end in the last 1 hour, courtesy perhaps the NSE weekly expiry. Sectorally, the big gainers include auto. The Nifty Auto Index ending with a gain of 1.5%. Realty had a strong session. PSUs higher. Nifty ID Index was up 1%, and banks moving in step with the frontliners. On the way down, it was just the FMCG Index ending mildly lower. Talking about stocks, right on top of the charts is Kotak Mahindra Bank, M&M, L&T, Eicher Motors, Maruti. These were some of the stocks with gains exceeding 2%. Bharti Airtel has been a strong mover, and Tata Steel closing up in the green. On the way down, Shriram Finance, Asian Paints, Nestle, Tata Consumer, some softness visible in these consumption names.
Today was one of those rare days when the large cap moves have actually outclassed the mid cap moves, because the large cap index is ending with a gain of almost 3/4%. Mid cap index up 0.5%, but there were plenty of movers here as well. Godfrey Phillips 8%, Reddington 20%, AG's Logistics 6.5%. You can just go on and on. PN Gadgil 5%. There is what else? Something like Salazar Tech 5.5% up on that stock as well, that name as well. So plenty of movers and shakers. GE Shipping up almost 5%. Metro Brands from the shoes. Some of these shoemakers actually were up and about. Mirza International, Khadim India, Metro Brands. Plenty of these stocks. Even Bata 0.5% up. So that's how it's closed out. Pretty strong day for the market overall. And the Bank Nifty also in step, 0.5% higher on the Bank Nifty. So the market has managed to sail past some of the near-term resistances. The expiry has ended on a very, very positive note. And let's see if the bulls can continue their charge as we get into the middle of